Okay, so this past week, it didn't turn out like I thought it might. We missed it by like one day, which was the fact that the Fed would pause at this meeting. Was kind of my prediction because I felt like something else would happen. It did. It just happened more on Thursday. Started to get wind of it on Wednesday, but more of these banks that were iffy before are in worse shape. Uh, so I was correct about that, but just the timing was off. And I think that the Fed is done and inflation has won. They do not have that. Well, the banking system is falling apart. But if you want to be conspiracy theorists, you can say that the regional banks are being squeezed out in favor of national banks like J.P. Morgan. And so the small and medium sized bank may be on the way out um, after whatever crisis that we have that's building up, not just in the banking sector, but across the whole economy in the U.S. So that was the big news, really, of the week, and it played into kind of how the markets reacted. And so let's just go and we'll start in on the economic calendar. Happy Cinco de Mayo, by the way. Remember, there was a stock named Ariba. I think they did some type of inventory or something. I remember owning the stock back in the early 2000s or so when they first started. Did well actually for a while. But this past week, we had the ISM manufacturing PMI came in a little bit stronger. And then Tuesday, we had the JOLTS job openings, which came in weaker. And that kind of played into kind of some shift in thinking. Whereas, remember, I said good news is bad news and bad news is good news in accordance to what the Fed would do. But now that they're winding down, I think we're going to get back to good news is good news and bad news is bad news. So we'll see how all of this plays out. But anyway, the 30-year mortgage rate clicked down by 0.05%. No biggie. I think when we look into next week, we'll start to see this start to tick back higher with the quarter rate federal funds, which I'll talk about here in just a second. ISM services came in at 51.9, which is pretty much in line with what the consensus was, but just a little bit higher. And then the Fed rate decision on Wednesday, and obviously all of the chaos associated with it. It's funny how closely the words are followed that the FOMC releases, that the Fed releases when they put out the quarter point. What's in their language, and what did they leave out? And I'm not going to get into all that, but you can look it up online. So they changed the language a little bit, making it sound like this is the end of the cuts, but they're leaving the door open, and I would say that they're done. And then the Fed, the conference, press conference with Powell afterwards on Wednesday was just, I don't know how our banking industry works at all because they got all these people that are supposed to be regulating things, and then you find out stuff like Silicon Valley Bank. Everybody's saying the Dodd-Frank's, got reduced under Trump and all this type of thing. And well, Barney Frank was on the board of Silicon Valley Bank. Don't you love it? And there's a whole slew of other things associated with it. I'd spend hours going through that, but I'm not. Then Thursday, we had initial jobless claims come in hotter than expected. Not much, but just a little bit. And then today, here's the interesting part. I don't have the actual numbers, but here I have the actual numbers for today, and the non-farm payroll was well beyond what the consensus was 253, and then unemployment rate ticked down to 3.4%. But it tells me that there's something funny going on, because when they did the revisions for the prior 2 months, they revised the numbers way down. Remember, we had those blowout non-farm payroll numbers. They got reduced. So that's, how could they? And the numbers were big, like 163,000. So what is happening? Let's see what else we have here. We got next week. But primarily, Wednesday, we'll look for the mortgage rate. I'm looking for it to tick back up, maybe as high as 6.6%. All depends on what happens Monday and Tuesday for that number is released. Inflation, that'll be a hotly watched number, even though the Fed uses PCE. It still is an indicator of kind of what's going on in the economy, will drive the markets. And then PPI, another one. We had that surprise of a reduction of 0.5%, and now the consensus is an increase of 0.3%. And then obviously the initial jobless claims, and then again keeping an eye on the Michigan consumer sentiment, which is expected to be 63, down from 63.5. And again, this plays into kind of the deflation thing. I don't expect anything dramatic to happen around that narrative this particular week. Now, let's take a look at the markets. And in the markets, we saw for the week, and let's just put this on weekly data. For the week, we were down in the markets, but you could tell the recovery here. We were way down after Monday, Tuesday, Wednesday, Thursday. So this was actually a nice recovery today, because it was getting ugly there. 4 red candles in a row, and then today we had the gap up and then the move up. Preferred to see something like that, but heck, I'll take that. And so when we look at the weekly data, this candle doesn't look as bad as it did. It is engulfing, which could be worrisome, but I just get the feeling that with the Fed pausing, that the wind's going to be behind the market's back at this point. On the SPY, which primarily is, tech plus banks, again, it got slaughtered there for a while, and now we recovered nicely at the end of the week. And so now you have a bullish engulfing candle over that, at least in the bodies. So then the Qs without the banks, more tech-oriented, the NASDAQ type of index, trading index, on a nice, finished nicely. Expecting it to be negative on the week, and it closed up nicely this week. And I think once we clear 334 here, then we'll work on 372. I think this thing's going up. I'm starting to believe David Hunter's narrative. And if you look at it, let's just look at it monthly. I mean, it just looks like you had this, one down. Now we're correcting during this entire huge bull market on the monthly index, and we're just going to continue. The expectation, I think that's kind of at least one of the measures he's looking at, is that big picture. The dollar was, made some effort this week to kind of raise, but it finished down, actually. Closed down lower than last week. And the 10-year, which is my harbinger of, kind of what mortgage rates are going to do and those types of things, 3.428%. We have WTI crude. We've got the crude, went way down at one point yesterday and then recovered some of it, but still we're in this kind of, it might be just popping around in this region here, say between 71 and 82.5. And my expectation is, this thing is probably going to stay in that range. It seems to have found a spot over the next week. And the VIX, again, look, we spiked up, after those 3 rotten days. It really went up. It went back up over 20, and then the volatility started back in, and then just got smashed down today by 14.5% basically. And then we have the investor sentiment survey. Now this, again, taken out on Wednesday night, increased to 44.9%. Now after today, it would be maybe back in this number, maybe 40%, something like that, as far as the sentiment goes. And remember, this dial here is kind of the contrarian view. When more people are bearish, this dial is going to be greedy. And no change as far as the number of bullish people. And then let's take a look at the Fear and Greed Index. Finished at 59, down a little bit. It was 60 when I last looked. And so people got greedy, but it had gone, I think 50 or 49 something this week, as low as that. And then this new sentiment survey, again, was taken out yesterday after 4 negative days in a row. It was down to 20.82%. And so just kind of one more thing to kind of keep track of and see what the investor sentiment is. So my final comment is I want to talk a little bit, let's take a look at some of the things I want to get up here. Is about gold and silver. And I haven't really talked that much about it because there hasn't really been that much to talk about. But gold and silver are real money. And they're starting to come to life. More gold at this moment. Silver seems to always lag behind. But it hit an all-time high at 20, I don't know, what's this number here, 2081.82. And you could see, and you could go back in time, but that was the highest it had ever hit. Now it didn't stay there, and it wound up going back down almost immediately, and we had a down day today. So let's just look at the daily. You can see that it was down today. People are talking about that it might go all the way down here to 1800 again. I don't think that's going to happen. I think if anything, it might go down here to about 1980, 1950. This is just an opinion. Maybe 1952. Looks like we get some support here, but I don't think we're going back to where it was back in March and late February. This thing's got some legs. And I kind of like the way it's increasing. It's taking a little bit of pullback. It's going back up a little. But one of the things that's driving this too is these bank failures. People, where do you put your money to keep it safe? And gold is not as volatile as, say, a Bitcoin or something like that. So this is becoming a safe haven. Now I've seen people that are talking about. David Hunter's one. I think his expectation was like 3,000. Peter Schiff talks about gold. He's talking probably bigger numbers than that because that's his. He's got funds in that particular area that are managed by Adrian Day and Euro Pacific funds, and we got a steady climb here, and. As the economy deteriorates, as people get concerned about things like banking, this is a safe haven for many people. Now, the interesting thing, I heard a statistic the other day that historically most people owned gold, and there's a lot of different ways to own it. You can own a physical gold that you can hold. You can store it. I've got some stored, overseas. I've got some stored here in the U.S., so there's a combination of ways to have your gold other than on your person. And another play on it is, you see, at least historically, you used to see miners, like gold miners, would go up for every percent. Let's say gold went up, you used to see miners go up 3%, but their costs have gone up too. So they haven't kind of kept up with the gold price yet. Probably 3 years ago, I think they were saying it was $1,300 an ounce, which right now gold is at 2017. They would have made $700, but now I'm starting to see in some of the reports coming out that gold is costs are ranging anywhere from $1,600 to $1,900 an ounce. So their margins are then thinner if that's the cost of mining it out of the ground. So that in particular, I just want to bring that up. People ought to put it on their radar. But historically, people have owned about 0.5% of their portfolio in precious metals, that's what we have today is 0.5%, and historically it's been 2%. So 4 times. So if people do start piling into this, then you might see this thing squeezing up. In association with it is to get worried about banks and the economy and things of that sort. Now, silver has more use because silver is used in solar panels, and it has a lot of industrial use. And so the expectation here is not only is it used for jewelry and things of that, but there's more use for silver industrially than gold. Gold's gotten pretty expensive to be able to have. But a lot of these commodities coming out of whether things wind up falling apart like Peter Schiff is saying, where inflation takes over, or we get this deflationary bust that David Hunter's talking about. Regardless, I have it in my portfolio. You have to make a determination for yourself if that's something that you think, you ought to have. I'm just telling you what the facts are, so you can do as you please. But they are all reacting. Silver's lagging. It's not to all-time highs like gold. We'd have to go back here. Let me get back on the weekly, maybe even the monthly. You can see, I think it went up to close to $50 or somewhere right around there. Okay, just under $50. So, it's got a long way to climb if it's going to be like gold to get up to the $50 amount, which is almost double from where it sits today. And, silver, I know David Hunter's calling for $60 silver, which would be well beyond the all-time high, and $3,000 gold, which we're a third of the way there. And so that's the expectation that we'll have for those two. The gold and silver is, I think it's got a lot of upside. That's just my personal opinion. You have to do your own research. But that's what I wanted to cover in my final comments. And so it'll be interesting. The more the banks fail, the more you're going to see gold and silver raise in price, or when there's some different type of tragedy that befalls our economy. Every time gold has risen, has been because of the bank crisis, or at least the big jumps. You saw the same thing back, if this is monthly, when we first start into this mess, that Ukraine was invaded by Russia. You saw a big spike in gold at that point. So it's definitely something I like to have around, especially for special events like that, because they'll pop when some crisis hits. Anyway, that's what I wanted to cover this week. And remember, there is always a better way.